Hey guys, Bitcoin keeps holding the spotlight across the entire market. We're looking at a strong uptrend, but there are still nearby risks of correction and important technical signals worth paying attention to. Let's go step by step, starting with the charts. On the 12-hour time frame, Bitcoin is confidently holding above the 200 EMA, and that's a key signal for the midterm uptrend. After the correction, the price reclaimed this level and is now staying above it. The chart highlights resistance levels. The first one sits around 117,463, and the next is near 175,463, 124,675. These are the closest zones buyers will be watching. Below, we see a strong demand area around 107,436, and lower still there's an unfilled imbalance between 103 and 104,000. As long as this zone remains open, the market can always revisit it. Dropping down to the 4-hour chart, the picture gets more detailed. We can see a series of imbalances, some of which have already been closed. But below the current price, zones remain that are still waiting to be filled, particularly the range between $109 and $108,500. These align with heavy trading clusters shown by the VRVP. On the right, you can clearly see a strong volume node exactly between 108 and 109,000. That's where the market is most likely to correct if local buyers lose control. On the upside, the range between 117 and 118,000 shows high selling activity, resistance that hasn't been broken yet. This is important for the continuation of the uptrend because holding the moving averages signals the price is preparing to target the previous all-time high. Right now, the price structure looks like a sideways consolidation typical of a bull market continuation. The fear and greed index sits around 47 points, pure neutral. In this zone, the crowd usually loses conviction, and that's when professionals love to accumulate positions. Neutral doesn't mean calm, it's balance, where even a small shift can quickly push the gauge toward fear or greed. And historically, strong trend moves are born from exactly this type of equilibrium. Open interest remains elevated, above 724,000 Bitcoin in total. The bulk is concentrated on CME and Binance, showing strong institutional participation. But the dynamics are mixed. It's climbing on some venues while declining on others. That's a clear sign of position redistribution. And the higher open interest stays during elevated volatility, the greater the chance of a sharp move that wipes out excess players through liquidations. In the past 24 hours, total liquidations topped $346 million. Shorts lost nearly $191 million, while longs lost about $155 million. The balance of power is clear. The market is flushing both sides, giving no rest to bulls or bears. Binance and Bybit laid in liquidations, showing that retail traders are taking most of the damage, which means the move wasn't random, but targeted. Funding right now is broadly neutral. On Bitcoin, it sits near 0.007%, while most altcoins hover around the standard 0.03%. No directional skew. That tells us the market isn't overheated and short-term moves can break either way without needing a funding reset. It's worth noting, sharp moves often strike when funding is neutral, catching the crowd off guard. Looking at the liquidation map, above current levels there's a cluster of short stops starting around 113,000 and stretching up to 118,000. Any upward push here could trigger a cascade of short liquidations, but below it's just as interesting. All the way down to 105,000 sits heavy long liquidity. The map makes it clear that both sides have left plenty of fuel on the table, and the market is free to hunt in either direction. On the Binance heat map for the past 24 hours, we see a dense cluster of large orders between 112 and 114,000. That's a local battlefield where sharp swings are likely. If sellers keep the price capped under this level, the first target for a move lower will be the 109,000 zone. If the correction deepens, price could easily revisit 107,000 or even test the 103 to 104,000 range where the on-field imbalance still waits. If bulls manage to push through 117,000, the next obvious target is 124,000. But above that, liquidity thins out fast, meaning any move higher risks a quick pullback. To sum it up, globally Bitcoin remains in an uptrend, confirmed by the hold above the 200 EMA on the 12-hour chart. But locally, the market is loaded with unclosed imbalances and heavy liquidity pockets below, which could drag price back toward 111 or even 106,000.